Good morning. This is Connor from 0DTE Traders here to present the week ahead for November 17th, 2025. To start the week, GEX, which measures dealer gamma exposure, is more neutral than imbalanced, although technically negative, 190 million notional, trading around both transitional levels 6770 flip and 6745 zero gamma. Two very important levels to pay attention to if you're an SPX trader. The flip is our main transitional level, and this measures where dealer hedging shifts. So above, dealer flows are supportive as they buy weakness, sell strength. This is what we refer to as the buy the dip regime. Below the flip, dealer flows are destabilizing as they sell weakness and buy strength, which leads to elevated volatility, both implied and realized. So you can essentially view that as sort of a risk on, risk off trigger. The zero gamma looks at one component of dealer hedging, by far the most impactful, and that is gamma. And this is where that gamma index will transition from negative to positive and vice versa. Options expiration is this Friday, and while there's more calls than puts set to expire, given the absence of positive gamma, dealers are going to be quite aggressive hedging their book, which could lead to large price swings in both directions as calls and puts quickly gain or lose value. So there could be a lot of chasing going on, even if price reclaims that flip level. And if you look at the absolute gamma chart, you can see those big double zeros and 50s where all the gamma is present. So those act as magnets, potential pivot points. We tend to see pinning around these big gamma strikes in the week of option expiration. In terms of trend, if we look at the SPX on the 1 hour chart, there's not really a trend. The SPX hasn't gone anywhere since mid-September, a mid-rotation from growth to defensive sectors, value stocks, which tends to limit upside. It leads to choppy conditions. So what we're seeing here, and that we identified in September, is very normal. Now, it is challenging for traders as there's a wide ranging conditions week over week, day over day. So very important that you have a process in place and you know how to filter your setups. If you don't and you want to learn how we approach SPX 0DTE, you can join the team at 0DTEtraders.com. Now, there are two trend lines to pay attention to. One connecting the all-time high. So this is a downsloping trend line. One test, two test. If we can push above that flip level here this week, that is potential target for a potential third test. As far as the downside goes, we have this upsloping trend line connecting the swing lows. One test, two test, three test, four. And the next test would be the fifth test. And as we know, the more times we test a level, the more prone it is to break. Essentially, the weaker that level becomes. So if we do take out that trend line, 6650, we could see a quick move down to 6550, which is the lows here from October. Turning to the VIX on the 1 hour chart, levels are unchanged week over week. 2223 remains major resistance on the upside, a point where we've seen volatility sellers active, including last Friday with the vol crush, 2 Fridays ago, vol crush. And then if you go back to October, several peaks off that zone. As far as the downside goes, 17.3 is the most recent lower bound, a point where we've seen volatility spikes. And then the mean of range is 20. This is also the max pain for Wednesday's VIX option expiration. So potential magnet pivot point in the next couple sessions here. Now, if we do kind of get a breakout in terms of volatility, it opens the door to the 25 handle and then 29, which is the November peak. So vol is quite elevated. There's the potential for feedback loops again this week, particularly when below the flip. Volatility likes to trend. So when you have big moves in volatility and you're seeing those peaks and troughs, you want to be very careful playing counter to implied vol, as these are the conditions where you see 1.5%, 2% swings. So once again, very important of having process, understanding market dynamics. It's going to be a busy week on the data front. NVIDIA is set to release its quarterly results on Wednesday, which is a market-moving event. But this quarter will be watched closely, in particular, given the recent weakness we've seen in the AI theme, amid concerns over high valuations and heavy capital spending. Also on the calendar, retail giants Walmart, Home Depot, and Target will report, offering insights into the health of the U.S. consumer, which is also deteriorating. In terms of economic data, the government shutdown has ended, so we're getting some delayed data now, beginning with the September non-farm payrolls report due out on Thursday, and the FOMC minutes this week due out on Wednesday. Traders will also be closely watching monetary policy, Fed speak, having cut the implied odds of a December 25 basis point rate cut to 43.9%, down from about 94% just a month ago, amid sticky inflation. All right, that's all I have for you guys. Best of luck this week.